Today, we were talking about one company that Wall Street thinks could rebound 40% by 2026. What is driving that potential? And should you care? Let's break it down. The company in focus is Navitas Semiconductor, with the ticker symbol NVTS. Now, what makes Navitas so interesting isn't just its recent earnings report, but a huge strategic pivot it's making to capitalize on the AI boom. If you've been watching the markets, you know that anything related to artificial intelligence has been getting a lot of attention. And Navitas is working to position itself right in the middle of this trend. They're not just a standard semiconductor company anymore. They're aiming for something much bigger. So, what's actually changing? Navitas is strategically moving away from its lower margin businesses. Think of it like a gardener pruning a plant. They're recutting off the parts that do it. Produce much fruit to help the more promising branches grow stronger. The company is now pouring its resources and energy into high growth, high margin areas. This includes developing essential components for AI data centers, creating advanced computing technology, and producing high power electrification products. These are the sectors where demand is exploding. This strategic repositioning is exactly what many investors have been waiting for, and it could be the catalyst that finally sparks a significant rebound in its stock price. It's a bold move, but one that could pay off handsomely if executed correctly. Now, why does this matter for the bigger picture? A huge part of the optimism comes from recent partnerships and technology validation. It's one thing to say you're focusing on AI, but it's another to have major players actually use your products. Some of Navitas' specialized power chips are already being integrated into new AI hardware. This is a massive vote of confidence, suggesting that key companies in the AI space are recognizing the value and performance of Navitas' technology. Beyond that, the company is also expanding its footprint in the Asian tech ecosystem. This isn't just about selling more products. It's about embedding themselves into the fastest growing technology supply chains in the world. Gaining a foothold in Asia adds another powerful layer to their growth story and opens up a massive new market for their high-end components. Of course, it's not all smooth sailing from here. No investment is without its risks, and it's important to be realistic. The entire Rebound thesis hangs on Navitas' ability to execute this pivot flawlessly. Shifting a company's focus is a monumental task, and there's always a chance they could stumble along the way. Competition is fierce, and they need to stay ahead of the curve. Furthermore, there are macro factors to consider that are completely out of the company's control. Things like fluctuations in global energy markets, new government regulations, or even geopolitical tensions could impact their growth plans and operational costs. For example, if energy prices spike, the cost of running data centers goes up, which could indirectly affect demand for their components. These are the headwinds that investors need to keep a close eye on. So, what does a 40% rebound actually mean? It's crucial to understand that a 40% rebound by 2026 isn't a guarantee. It's a prediction, an analyst forecast based on the company's strategic shift and its potential within the booming AI market. Analysts are looking at the pivot, the new partnerships, and the growing demand for AI infrastructure. And they see a clear path to that kind of growth. But it's a possible outcome, not a certainty. It all depends on whether Navitas can successfully deliver on its promises and navigate the challenges ahead. This forecast represents the upside potential if everything goes according to plan. So should you buy Navitas stock? Ultimately, that decision depends entirely on your personal investing goals and your tolerance for risk. This is not financial advice, just an educational look at an interesting company. But one thing is clear. The market is currently rewarding companies that are well positioned for the AI-driven future. Navitas is making a very deliberate and aggressive attempt to become one of those companies. It's a high-stakes, high-reward play that is definitely one to watch. I'd love to know your thoughts. Would you invest in a company based on a major growth pivot? Let me know why or why not in the comments below. Thanks for watching, and don't forget to follow for more insights.